Heidi ho, everyone, and welcome aboard. It is the Sunday Market Review Show, number one for 2021. It's wonderful to have you on board. Thanks for joining us. As always, a lot to get through on a Sunday evening or afternoon for most of us, I suppose. And we'll be kicking things off very, very shortly. Alexis is normally in the room at this time. She may be running a tad late. And the boss man, he's a bit late as well. He'll be in about 15 minutes from now. And Alexis is here. She's just informed me, so we'll be going to her very, very shortly. PB, the boss man, he's putting the kids to bed at the moment, being daddy. And that's a wonderful thing. It's always family before trading. We always say that. Julian's joining us as well. He'll be talking about all sorts of things across all markets. Shukri in after that. He'll be talking cryptos as usual. And boy, oh boy, have we seen the crypto explosion in the last few weeks, or couple of weeks anyway. Ainslie will be not with us today. She's unable to join us, but next week she'll be back with her gold and oil synopsis. And of course, I have Lloyd in the room with me as well. He'll be talking currency indexes later on. Then I will probably wrap the show up with my four charts. Actually, I've only got three at the moment. I want to hear what a few of these analysts have to say throughout the show, and I might draw a conclusion around a couple of things in particular pertaining, strangely, me being an Aussie, the Aussie dollar. Before we just go to Alexis, I will share with you a screen which kind of kicks the ball off or gets the ball rolling for mine in 2021. And that is, I hope I'm sharing the right screen here. I can't see for the life of me. Somebody will tell me if I'm not, I'm sure. Yeah, things kick off really from a, data fundamental point of view, I suppose, this week. And we see Tuesday zip, but on Wednesday, really, it starts to get into gear with the Canadians giving us their monetary policy and bank statements or rate statements. Conference around that as well. President Joe, we have to get used to that, I guess, because we'll be hearing a fair bit about it. Well, what a week there was last week in the US with what was it, the weekend before? Time just flies. With all of that ruckus that's going, absolutely tragic, going on in the States, and wow, they've got him again. I think it took them 4 years just about to get him, but they might get him this time. That is Trump, of course. The reason that they would be trying to get him is so that he can't come back. He can't contest another election, as he probably threatened to do. Wow, we thought he'd go out with a bang and not a whimper, and certainly that has been the case. But potentially all over this week when we do have that inauguration of Mr. Biden as the new American president. Employment figures coming out from Australia. I want to get ahead of that, really. I think we might be looking at a little bit of a retracement on the Aussie. And I want to hear everybody's commentary around that before I make a decision on which currency I'm going to choose to trade against the Aussie come tomorrow morning and into the week, of course. The Japanese released their monetary policy statement on Thursday as well. And if that wasn't enough news for you on Thursday, then we've also got the MPC releasing their monetary policy statement. The ECB press conference follows that. And of course, we've got the bank's governor, Bailey, speaking thereafter. Big Thursday, almost a super Thursday, not quite, doesn't quite fit that category. CPI figures coming out of Kiwi land on Friday morning for most of us. And we've got some manufacturing data coming out on Friday. So it really does start to kick into gear this week. And I would expect that we'll have a few traders back at work that probably haven't been there yet in January. And I'm really looking forward to the year. I think we should see a fair bit more uniformity, I'll put it that way, versus what we've had with COVID. COVID's still there, hasn't gone away, but we do have, of course, vaccines being in varying degrees of success, one would have to say, but they're being rolled out all around the world at the moment. So there's been positivity there in the last few weeks. We've now got a new president, potentially without too many more hassles. And of course, there's all sorts of things that have gone away with Brexit as well. But a lot of toing and froing there also. But that's kind of gone. So we've got those three major things behind us, almost, not quite there yet. So I think there is fundamentals aplenty. As always, we look to Alexis to navigate us through that wonderful world. Hi, Lexi. Happy New Year to you.
Hi, Happy New Year. Hi, everyone.
How's it going, mate?
Okay, so far so good, I would say. It's been
Have you
an
pulled?
interesting week.
Yeah. Have you pulled any triggers yet on any trades?
Uh, yeah, I've managed to get in on a little bit of the dollar strength that has been happening the last week. So I think that's a good entry. Cause I'm just gonna share screen just to shoot a couple of articles and
Please
show you
do.
guys what's been happening around. All right, so I think the last. Let me go to the one that's earlier. Okay, this was I think about 5 days back last week. There were news that the analysts were calling for a weaker dollar. So this is the Financial Times. This is just one of the indications that there might be a stronger dollar coming back. And I'm just looking at headlines mainly. So if you guys are interested, you can just Google it. We have stock markets that are also showing the reaction to a stronger dollar. They have started to weaken. We have seen gold as well taking a pause in the market, and I think a lot of markets are eyes on US. Joe Biden is in. Is it going to be stable there? Is the numbers going to be good? So when we look at things like the I would say the statistics, let me just pull up the trading economic statistics page that I always use. I think it really is interesting because we have been seeing that the US has been holding its 0.25% interest rate steady. They don't have any forecast that they are going to lower it. I think this is as low as they would go. So there have been speculations of whether or not they are going to go below zero, whether they're going to go lower. But so far, I think those are just like rumors flying around. So 0.25% at the moment seems that's all they are willing to go for now. All right. So what's looking next that could possibly further weaken the dollar is number one, stimulus. If there is going to be huge chunks of stimulus coming out that would again increase the dollar liquidity in the market, there is a possibility of the dollar further weakening. But if we compare that to so-called the rest of the countries, the dollar being what it is, if we look at things like technical strength, if we look at things like we are in the beginning of the year, for the dollar to weaken further, I think it's going to take a lot of pressure from somewhere. I don't know where that pressure is going to come from, but in terms of probability, in terms of I think statistically, the dollar index is really really low. It has been low for almost the last quarter of last year. So even if it's not going to rebound fantastically, we are due for some kind of retracement. And that is what I will be actually looking to take advantage of, because we are nowhere near normal, I would say normal world. This is post-COVID, so this is the new normal. Travel has not opened, numbers are still high. The only thing that is new and interesting would be the vaccine and the take-up rate. It's not as fast as I think people would have liked. People expect the vaccine to come out and everybody to start flying straight away. But I don't think that's the case. There's going to be rounds of vaccine testing, whether it works or not. And then, as the virus mutates, so there's a lot of stuff down there we don't quite understand in the medical world. So if we're looking at 2021, when will people start flying again? Because I think, again, when the market starts opening up in terms of tourism, in terms of the air flights coming back, I think that would be a really big signal that things will shift. But for now, it's still kind of slow and sluggish. But what we are looking for, I think, it's stability, and the US has that stability already with Joe Biden seemingly having a good hold on the position and Trump fizzling out. So with that, I'm hoping that with that stability comes a little bit more confidence back in the US dollar. all right, if there's nothing weird and funky coming from Trump, then I feel that the dollar will slowly recover its strength in that sense with a so-called more stable political arena in the US. So the pairs I'm looking at next week is dollar pairs, taking advantage of the pullbacks on the longer time frame, or trying to catch the short-term strength in the shorter time frames, and of course making a play against the euro as well. The euro, interestingly, I think somewhere last week, actually just yesterday, this article came out where there is word that they are trying to curb reliance on the dollar in the post-Trump era again. What it could possibly mean is they want to kind of, I would say, separate its dollar reliance. Whether or not the euro will take over as the next global dollar, they are really far from it. But it really seems like the euro is trying to figure something out. So we will have to wait for more news coming from the euro from Lagarde to see where it's going to take it to. So the euro will be interesting to watch in the next I think couple of weeks or months. And that's all I have for me. Thanks, Geoff.
Awesome, Lexi. Just one thing around, you did mention it, the reaction to the stimulus from Biden camp. How do you read that?
I think it's not a very big reaction because the stimulus is not massive. There have been talks of stimulus already for the past months, even before Biden took over. So regardless of who took over, there was going to be a stimulus out. So the market would have already kind of priced in this in the market, because everybody knows, doesn't matter who wins, there is going to be a stimulus. It's just a matter of how much and where it goes to.
What was it, 1.9 trillion or something?
Yeah, I mean, I think
chicken feed for
if you compare it, it's just 1 point something trillion as compared to their previous stimulus.
There you go. All right, mate. Thank you very much indeed. Much appreciated. I'm sure that our next guest, and yes, he is in the room. Our next guest is going to give us probably some opinion around that and many other things. Happy New Year, Jules.
Hey, mate. How you doing, by the way?
Hello. Happy New Year, Paul.
Happy New Year to you guys as well. Nice to see the team, and thanks for being here, guys. And thanks to all those that are joining us today, be it in the room or on Facebook or YouTube. It's great to have your company along today. Look, getting a few questions about some stuff with the graduate side and the links. And guys, we just can't help you in the show with that kind of stuff. James will get onto that again tomorrow. We're certainly working through it. But the trading team aren't the ones that can really help you with that stuff. Great, guys. Look, time to get to Julian. I'm fascinated to hear what he has to say. The stuff in US this week, literally Trump should finish this week and Biden should be inaugurated, and it'll be interesting to see how the market does deal with that. Julian, is that something you're focusing on, or is there other stuff you're focusing on this week?
Yeah, look, it's an interesting conversation, Paul. I think the issue with the violence in the Capitol, I'm going with the basis that it's fully priced in, and people are aware of it. If it's out of hand, then I think that would be interesting. If it's a damp squid, I don't think anybody's going to care. I always view these things, view the news through the very cynical lens of where the stock market is. And when you look at the news about the Congress being invaded, I think the stock market closed up that day. It tried to go down, but didn't really succeed. So sort of gives you a clue as to what people really think about it. I don't think anybody, number one, cares, and secondly, thinks they're going to get away with anything significant. And what the hell, we impeach the president again with the House of Representatives. They have to actually take him to trial and convict him if they're going to do anything, and we'll see whether that ever happens. I suspect a Biden pardon might be in store for him after maybe a year or so. But anyway, in the world of finance, who cares? So we move on from that. I think what's really important right now is as Alexis was saying, right, the sentiment is very much on one side of the boat regarding the US dollar. People have pretty much convinced themselves that it's going to underperform every other currency on the entire planet. Usually that's a very good thing for economic growth, and we've already begun to see that sort of start to happen a little bit. really where I fit with all of this is, well, actually, I don't really think we're going to get too out of hand here with the dollar, certainly during this very seasonally bullish time for the US dollar, which essentially is January and early February. And so I am of the other camp. I am of the camp that when you look at the technical charts, we are beginning to put in higher lows on a number of different currencies, and there's a opportunity here to reverse this trend. You know, I think people are pretty convinced the dollar is going down. That seems to be a relatively universal thing. Maybe they need to be disavowed of that. So I am at the moment, from a technical standpoint, seeing significant bullish divergence in a number of different currencies, not all of them, but a number of different currencies, which suggests to me that we're going to have a more serious correction. Now, how that happens, I don't know. The euro has been unfolding in a corrective fashion, exactly in line with the seasonal pattern as we saw last week. That's also the case in the dollar Swiss as well too. We're beginning a move down in the Kiwi. That happened on Friday. It was a pretty poor day for the Kiwi against the US dollar, as it was for the Aussie as well too. And dollar Sing as well is, by all according to what I'm looking at, putting in a higher low formation. Certainly it is if you go down to a 4-hourly chart anyway, and beginning that aversion point trade that I talk about so often in the sentiment cycle. The potential for that is setting itself up. So, you know, as always with these things, you've got to trade, you've got to get the entry point right, and you've got to get your risk reward right. So that's going to be all my caveats that I'm going to throw at this. But I think that there's a number of different currencies that are reversed. Not all of them. The Indian rupee, I don't think, has done a major reverse. Interestingly, the Chinese renminbi is looking like it's also putting a reverse in this week, which will be quite interesting. And you know, gold is completely disconnected. We always think gold is another currency. Well, right now it doesn't trade that way. It seems to be a little bit disconnected from everything and is trading in a bit of a mind of its own during what essentially is for gold a relatively seasonally bullish time. So I think there's a reasonable opportunity for the gold market to put in that higher low and maybe set off on a rally. I just don't know when that's going to be. So really my pattern and my thinking over the course of the next few days is going to be US dollar bullish, with the caveat that people manage your risk reward correctly. Otherwise, if you're just going to buy the US dollar, you know, don't forget you're doing 3 or 4 of those different things. They're all the same trade. In fact, probably pretty much if you're buying the US dollar, you're probably shorting US stocks as well too. So bear that in mind. It's the same equivalent trade, you know. We can all see where the market's been going for the last, so I hope people can hear. I might have broken up there for a second. We can always see where the market has been correlated the last few weeks and few months, and those correlations will also work in the opposite direction as well too. I have never seen such euphoric behavior in the US stock market. It remains quite incredible, and I just caution everybody that we're at the enthusiasm stage of the sentiment cycle here, where the fear of missing out is far more important than the risk of losing money. And that normally is a sign that something odd is going to happen. I don't know where it will be. It will come left field, but something odd might happen. Perhaps the market's already priced in a COVID recovery. Perhaps that COVID recovery is more extended than we thought, takes a little bit longer, and or the vaccine doesn't get distributed quite as quickly, and therefore the economic recovery is delayed. Any number of things. We'll see what happens. If it's COVID related, that might catch people out by surprise, but always think about this, right? What's going to catch people by surprise? Because that's the mode we're in at the moment. There's also been a big movement in the differential between Japanese and US bond yields and Europe and US bond yields. That's quite worrying. We don't have charts of those, but you just go look it up on Bloomberg anytime you want to get a feel for where they've been over the course of the last few weeks. And that normally is also supportive for the US dollar as well too. I see who's doing the is that you, Paul, who's doing that? Because whoever's doing the thank you very much for passing those yields around, and whoever's looking at that, clearly you need to buy that wine that you've been targeted by Facebook. Yeah, I think pretty much that's it for me. So my overall thing is US dollar rally is the vague thing. Oh, one last thing as well too, Euro sterling. I've been talking about this endlessly, Euro sterling, for the course of the last I don't know how many weeks. You guys are all bored of me talking about euro sterling, right? If you look at the daily chart of euro sterling, it's starting to break down, right? So what is going on here? It means that sterling is strengthening against the euro. Why is that? Well, it's ridiculously cheap, that's why. And post-Brexit, it wouldn't be unreasonable to think that we're going to head down to the very low 80s at least. So as the story and the attractions of the UK become apparent, now they're out of the euro. They will have all the same standards, but have a different methodology for promoting business, which I think will be quite interesting. It won't happen by Thursday. This is a medium-term trade. I'm maintaining my stance that US sterling is crazy expensive here and sterling is cheap. And we're going to see that cross rate head down towards the 60s at some point, but certainly the low 80s over the course of the next 6 to 9 months. That's it for me. Thanks, guys. And thank you very much for whoever's doing the slides. That was you, Alexis. You're very fast.
Sorry, guys. Geoff, do you still have this?
Sorry, mate. I thought you'd taken over. I can if you wish.
Mate, if you could get us through, I'll be in the room. But if I can leave it to you guys for a little while, I'm just doing a bit of stuff in the background now. If you can take care of that, that'd be great.
No problem at all.
So there's a question on oil has come up. Is that just now we've seen it? Yeah. Look, guys, oil is a interesting one. I think I don't know if Ainslie's in tonight. Is she in tonight, Paul? Are we?
Ainslie's not in tonight, Julian. Welcome to have. You've had a chat about gold, a bit of oil. It'd be great. Thank you.
Yeah. Look, you know,
just
the chart of oil is pretty obvious to everybody. So,
have you taken your extended holiday and you've taken a little button-up shirt on down there to make yourself look professional for us? I'll appreciate that, Julian.
No, actually, Paul, no, I haven't. In fact, this is my standard brown trading jumper. For those people in my trading group, they will know. They will know about my brown trading jumper. So
yes, no.
Chances of me wearing a proper shirt for the next few weeks is going to be quite low.
I was a bit surprised, to be honest. I'll leave it back to you, buddy.
I will try and find you one for next week, Paul. Okay, so oil. Look, you can see that chart as well as I can, right? The oil market's been doing pretty well. The seasonally bullish time for oil, unbelievably, has not started yet. It starts around about the end of January, early February. What does that mean? That means that oil should rally between February through till May or June. Okay, what are we looking at here? Well, we're looking at quite a substantial rally since March already. So what does that mean? I would love oil to go down for the next 3 weeks to give us the opportunity to get a seasonal buy on. I suspect I'm going to be unlucky with that, but who knows what's going to happen. My overall projection for oil for 2021 is way higher than where we are now, way higher. The question is how we get there and what the journey is going to look like. We need a setback of some kind before I'm going to get interested. It's really hard to buy new highs when we've gone from what essentially was $17 up to 56, and I don't know what that is. That's like 3 times the price, right? So hard. So my view on oil right now is overwhelmingly bullish for 2021. There's supply issues in the States coming down the pipe, if you'll pardon the pun, and I think there's going to be a lot of problems that are going to create distortions in the oil market that will be very bullish for oil, but not yet. I would love to see a corrective phase for the next few weeks, which would be great to set us up for a move in late February through till May, but I don't think we're going to be that lucky. It might just sit here and do nothing. So that's my view on oil. Very bullish for 21 and 22. If you go back and look at the 10-year cycles, by the way, interestingly enough, we're due a 10-year cycle run in oil as well too, which puts us probably to up to the $150 mark, which sounds completely crazy as we sit here today, but it wouldn't be unreasonable over the course of the next 2 to 3 years to see the market go back to the all-time highs. Now, why would that be the case? That will be the case because this will be oil's last big run before we all decarbonize and drive electric cars. So, yep, that's my view on oil. That helps, Paul.
How about gold, mate? Anything going on gold?
Yeah, look, gold's been corrected for the last 3 months, 4 months overall. It's been a bit of an interesting journey. Oh, leave that chart up. That's really cool. Oh, go back to that one. This must be Alexis, Geoff. This is way too quick.
Yeah, too fast for me, mate. That's right. Spot on.
Look, that move we've had since the middle of 2018 to where we are now isn't as big as the move we had back in the mid double O's, right? Either in percentage terms or time terms. So I am still fundamentally bullish on gold. It is a great inflation hedge. The big however to all of this, it only is a great inflation hedge at certain times. For 6 or 7 years before 2018, 6 or 7 years, guys, it went nowhere. Now we're in a bull trend again. So what's the game plan here? The game plan here is this is what we're seeing at the moment, some kind of corrective move. Right, that's what the last 3, 4, 5 months have been all about. It's still bullish medium term. We all know the reasons for that. Let's not get into the inflation trade and everything else. You guys can read the newspapers as well as I can. Right, what we're trying to do here is to make money. So if this is still a corrective trade, where does this either correct to on the downside to give you a final buy signal, or does it now move up from where we are now, which is a great question. So if you go to the dailies, Alexis, then when you look at this analysis, you can all see that everybody is completely uninterested in gold. Why are they uninterested? Because the price is everywhere for ages. You're better off buying Bitcoin. And as a result of that, it's not really over-owned at the moment. I don't think anybody in the fast money has gold right now. I think it's only owned by people who are never going to sell it because they believe it'll be worth more in 10 years' time. So here's the play for me. The play for me is we are looking for a higher low, either to come this week or early the following week, which fits in with both the seasonal pattern and also with the cyclical pattern as well too. Gold is a buy between here and March traditionally. Yeah, exactly. Somewhere, you can play with the trend line. I'm not a huge fan of trend lines. Sometimes they work, sometimes they don't. I sort of get it. I think that if it holds the point where we are at the moment, we may muck around a little bit next week. I don't know. There's a US holiday Monday, so maybe we do, maybe we don't. But thank you, Alexis. I much prefer support lines. I'm looking for false breakouts in gold for a higher low, which will be the beginning of the next leg up towards those old highs up at 2060, 2080 and 2100. So that's my basic thesis. We might not get that, who knows, but that's my basic thesis for where I see gold. So it's been corrective, and that's how I'm looking at it. I don't think this is a bear market in gold. I just think it's a corrective move from what was quite a spectacular rally. And some days we have to get quite patient about these things, guys. Not everything that we trade these days trades like Bitcoin, where it moves 20% in a week. So financial assets don't work like that, unless of course you own Tesla. But financial assets generally don't work like that. They take a little bit of time to work through, and the volatility is a little bit lower than some of those Bitcoin and cryptocurrencies. So we just need to give this a bit of patience, a bit of time. For the next 2 months, this is bullish. The cyclical, the seasonal patterns are there. You just need to see the technical support it. So at some point in time, hopefully it goes up.
Cheers, mate. So summarizing dollar bull, you're an oil bull, and you're waiting for a gold false break of that support line.
Yeah, something like that, Geoff. Yeah, and also a euro sterling bear as well too. Big euro sterling.
Yep.
Julian, can I just ask you really quickly on this one? Do you think one of the problems that gold's finding is that people are abandoning it for Bitcoin? So the traditional gold traders just going, well, I can just put money in Bitcoin and make my money far quicker.
Yeah, I think actually, yes, you could say that. I think that probably what's going on is interest rates are rising, and that is creating the asset allocation programs to allocate away from gold into other asset classes, because don't forget, gold doesn't pay a coupon. So if you can get more money owning treasury bonds, you're probably more likely to own those than you are to own gold that doesn't pay you anything. So there's a natural asset allocation set of models that are driven by computers that will, as interest rates rise, they will sell gold. And I think that's what's been going on for the course of the last 10 weeks. That doesn't apply to Bitcoin, which, as anybody knows, has a mind of its own and does what it wants. And if you want major support in Bitcoin, I'm not really a Bitcoin trader, but if you want major support, I believe it's around 24 to 28,000, which, by the way, was where we were only 3 weeks ago.
Yeah, it'd be interesting to see if it does go back down, have a look at that or not. Yeah, I'm going to remain a Bitcoin bull for now, but we'll wait and see. We'll let the patterns develop a little bit. Sorry, Geoff, just wanted a button and check on that. I'll hand back to you.
All good, mate. Speaking of Bitcoin, thank you, Jules. Much appreciated for all of that extension onto your time. Enjoy the prairies, wherever you may be behind you. I'm not sure where that is.
We're on our way to, yeah, it's sunny in that photo. It's raining here now. We're on our way to Queenstown over the next week or so. So fun capital of New Zealand.
I was just on my way back from Queenstown. Obviously, Queenstown, Tasmania. Have a great rest of the holiday, mate. We'll catch up with you next week.
Okay, take care, Geoff, and thanks for listening, everybody.
Okay, we spoke about Bitcoin, and believe it or not, we have the Bitcoin man. How you doing, buddy?
It's gone crazy, Geoff.
I thought it was always crazy.
But this is even crazier, but this is not the peak of craziness. I'm going to show you an example of what the peak of craziness. We're not there yet, but we are going towards that. So
okay.
In the world, this is still safe, believe it or not. But before we go to my charts, I just like to comment on what Jules said. That was a great comment. You know, why is money going to Bitcoin? Well, I will let you guys decide. But here's the thing. Jules said that, you know, gold did nothing for 6-7 years. So and then it moved up, right? Well, Bitcoin has a 2-year cycle. And if you're of the younger and more computer literate generation or crypto literate generation, which is increasing, okay, increasing, then you want to wait 6 years or you want to wait 2 years? It's obvious, right? So you kind of get into cryptos and Bitcoin and all that. And the second thing Jules said, yeah, right. Gold has no yield, right? But nowadays, thanks to DeFi, Bitcoin has yield. You can actually stake your Bitcoin and have something. So it's between something that's 2-year cycle. That means we don't get depressed for more than 2 years. Okay, you might be depressed, but it's only 2 years.
There's good news.
That is only 2 years, Geoff. go and buy kava during that 2 years, okay? But then after that, it's like happy days again. And while you are riding the wave, you can always stake it. So let's see what happens. I mean, it's gone bananas, but not as bananas yet. So that's kind of good. And I'll show you what bananas really mean. Well, there it is.
You know, that of course, sorry, I'll just butt in there. That's probably the best news around Bitcoin or around cryptos rather that exists, in my humble opinion, because you don't have to trade them, do you? You can you can actually invest in them now.
Well, next week, just before there's going to be our show right next week. I'll tell you about the trading. I'll tell you what I learned. Now, guys, I've met all my targets, but I'm not happy. And this is what I call happily unhappy. And I'll tell you the story of Brian Lee afterwards. I think Geoff knows the story, right? He's unhappy at 4 times gain. And that's what you need to be a good crypto guy. But anyway, this is Bitcoin. So we kind of hit like 42. Dumped the biggest dump ever, 12K. This is like the biggest in history. Of course, when it goes here, everyone's saying this is the end of Bitcoin, which is fine. I think, yeah, we're just at support there. And see, this is the thing with cryptos. Trading is very, very difficult because let me show you an example here. Look at that. Everyone saw this, right? Hey, where does it go to? Head and shoulder. Okay, let's prepare the burial. No, didn't do that. It just went straight up again. And now it's testing this level. If it breaks, we're probably going to 52. That's just it. But this, you know, just going up blew a lot of short people who were shorting. This blew up a lot of people. Yeah, this blew up a lot of people who were shorting also. But this also blew up a lot of people who were long. So if you're trading, it's very, very difficult. And if you're trading on leverage, I'm going to introduce to you a new saying, which is called liquidation. You probably got liquidated because you're on leverage. I don't like going on leverage, okay? It is not healthy for your health, okay? Ethereum, I'm quite disappointed in Ethereum here because it never hit the all-time high. We're still 1.4. So it still owes us that all-time high. Come on, man. Bitcoin has gone there. Bitcoin has gone there. Why not this? Why not Ethereum? I think we're going to discuss Ethereum more tomorrow in our show, so please don't miss that, 7:50 p.m. The next thing I said, right? You remember, Geoff, you were saying that you wanted to go to cryptos, right?
Yep.
So, since you're Aussie, the cryptos are quite volatile, the Aussie ones. But here's the British one, which really I was recommending this for you, but we're going to do this anyway. Polkadot. So you guys, why you must come to the show at 7:50? Look at this. I did that show on the 13th. Look what happened. Look at that. It just went from 8 to like 9. It went to 19. I didn't know it went to 19. We were buying at $4, okay? $4 or below 4. But look at that run. So look at that run there, okay? So this is something you have with crypto. As I said, crypto is like dog years. Things happen very, very fast. And sometimes you have to adjust your mind or you're just going to go crazy. And I think the danger with this, well, I'm going to tell you a story. I'm kind of good that there are outsiders that have come and watched this show. But on the other hand, I'm not happy about something. I'll tell you what it's all about. I think this is like the most popular coin in the world now, DOT. And when people see me calling this DOT out, they somehow assume I caused this. But, people are like messaging me, can I get into DOT? Can I get into DOT? That's dangerous, okay? Because I tell you, when I get that, Geoff, it opens up the doors to trolls. It opened up the door to haters. It's like, what do I say, right? So pardon me, guys, if I'm just reluctant to give recommendations on this, because you got to understand, we bought at 394 and around that, okay? But anyway, the market in crypto, let me show you what it's like, and let me tell you the challenges we have, because these are very, very real challenges. Let's go here. Yeah, there we are. Okay. So January of trades, hodls, and Templars. These trades have done very well, where we have held on for dear life. The trades, it has met the expectations. In fact, it has exceeded the expectations. However, I'm going to introduce you a new term, happily unhappy. Yeah, we're happy, but we're not happy, okay? The Templars are the new one that we're gonna use, and I'm gonna show you why. But whatever it is, guys, Chinese New Year, can you guys take a break? Because in the past 4 years, 2020, 2017, 2018, 3 of the past 4 years, cryptos have gone down before or just after Chinese New Year. Basically, the gods are asking you guys to go on a break. So please listen, okay? If you don't believe in God, listen to Santa Claus, probably ask you to go for a break. Listen to the ox, okay? This is a very, very dangerous area, although we are very bullish now. Now, in being happily unhappy, I'm glad to say that my students have started to really live the life of crypto. For example, Brian Lee, are you here? He is not happy with 4 times. I'm like, Winnie Law is not happy at 4 times. Now we have 2 people unhappy. So I give like a provisional target of Polkadot at 16, right? Winnie is not happy. She says going to 18. Well, look, it went to 19. And this is the most important lesson, Geoff. Remember this, and every one of you, women are always right.
I learned that a few years ago.
and that's why New Zealand is COVID free. So guys, just please remember that, okay? But now even me and the students are in transition. And I think this is the challenge of teaching a crypto class, right? Because the next batch that comes in are going to be like, you're asking us to buy Polkadot at 5 times what the other guy did, Yeah, that's just the way it goes, And let me tell you why. We are not there yet. As crazy as it sounds now, we're not there yet. We're not all season yet. This is coming. I will tell people in class when. Look, your 2K can go to 200K in a month possible. The best news now is that even Bitcoin maximalist is called Raoul Paul, even is entering the alts market because of this asymmetry. Okay, you risk a little, but if it goes, it goes. Yes, this can happen. This can happen only if you don't mind losing 2K, okay? But those things happen. We are not there yet. I'll show an example of what we are and why sometimes I have to be careful of what I say. But look at the trend here. See, even in Malaysia, how to invest DOT in Malaysia. Guys, if you know this Kiranjit Babra, can you ask her to attend the show tomorrow? Maybe we can help her there, okay? Don't miss the show tomorrow. We talked about DOT on Wednesday. Tomorrow, we're going to talk about Ethereum, right? What's going to drive Ethereum to its all-time high, if ever it goes there. And Wednesday, don't forget that these are the cryptos that are driven by, they're not driven by Joe Biden, but the fact that Joe Biden has taken over, but we're not sure, right, Geoff? 20th, and I'm assuming the inauguration goes well. These cryptos should do well because of the relationships there. Now, I know a lot of people are asking for like tips and all that. I can't do that in the near term. You got to understand what's happening, okay? Like, for example, and this is a true story, and this is my dilemma, right? I don't want to give birth to a ton of haters. Not yet. Maybe by the time we have that trading, that's possible. Okay, look, I think my students saw this, right? We put in 3,284 in an account. And this has grown over 3 months to $10,800. That's how insane this can be. This has a lot of DOT, and people know this, right? DOT and a lot of DOT tokens. Now, let me tell you something. Why I was quite concerned that day. It has fallen like 1,000 in a day, and now it's 9,800. Hey, but since we were here, that's okay. It's a correction, right? But imagine had you gotten here and you were down by 1,000. It'd be like what Ash was saying on Tuesday, right? People cannot stomach that kind of volatility. And that's why when you do this, you have to size it correctly. You have to stomach these types of volatilities. Now, what I was concerned about that day was last week, and I'm glad I'm still concerned, because what caused me to panic is that someone basically sent me a message and said, hey, thanks for the signal. I'm like, hey, I don't give signals during the ATW show. I just don't do that. What in the world you're talking about? Okay, then he explained that he's an old-time crypto guy from 2017. And since he's been following me, he basically knows when I ask to buy things, although no one knows. Okay, that's okay, guys. That's okay. Ask your old crypto guys to follow me. So that's cool. And he said he bought DOT at $4, and that was way in December when I was also talking about DOT in December. But that's really cool. Okay, so I was panicking that, hey, I didn't ask you to buy DOT at 13 or 14 or 19, you know. So that is the challenge. But yeah, this is what's happening in crypto land nowadays. Any questions? China big on crypto? No, China is not big on crypto. China is big on CBDC. Okay, but let's talk about countries. China, but the Chinese are big on crypto. So there's a difference, okay? And the Chinese are very smart people. And guys, can you guys respect the Chinese? They want their Chinese New Year, okay? Because if I were Chinese, I'd be selling some bags too. And one more thing, Geoff, is that I have to use a lot of hidden language. I explained to the guy, how did you know that day I was giving a signal on DOT? He was saying something to me, but I was mentioning bags. Yes, in crypto land, if I say, and I'm not going to say this ever, I'm going to buy a bag now. It's not the IKEA bag, okay? It's actually I'm buying, which I was anyway at that time. Okay, yeah, DOT has only started. Yeah, it's only started this run. It's an incredible run. Okay. But again, we will find a way for Geoff in. I know, Geoff, it doesn't look good. Like 4 times. No, there is a way in. Don't worry.
Okay, you continue to be happy, and and keep up with the cryptic crypto.
Yes. The cryptic.
That's the new phrase I'm going to use. Cryptic crypto.
The cryptic messages, right?
Yeah, there you go. All right, mate. Thank you.
Tell you, okay. Don't feel anything, because even my students don't know. If I have a show and I'm actually buying, I send them, because we have a group where I send messages every day. I have to send them that note in case they missed it.
Fair enough. And if you want to join that group, you've got to tune into your show, which is on tomorrow at 7:30.
Yeah, 7:50. Right? Yeah, 7:50 p.m. Yeah.
All right, guys, and he'll talk a whole lot slower than he did tonight. I'll guarantee it.
Yes.
You can't. It's not possible. All right, let's go from cryptos to currencies. And Lloyd's standing by, and he's got a whole lot of, I think he's got a whole lot of news around currency indexes. What do you got, mate?
Hi, Geoff. This is Lloyd speaking. All right. Really, I've just only started my trading back last week. But I've seen that there's quite a fair bit of changes to the currency movement. So let me get on to that. All right. Wait a minute. Okay. So first off the list is actually the dollar index. Yeah, so the dollar index, those who actually remembers, back in December, I was pointing out that there's possibly a divergence. And then, so for anybody who trades divergence, actually I do pay a lot of attention to them, especially if you see something which what some people say double divergence. Yeah. So whenever I see that, I tend to be very, very careful on trading the prevailing trends. Yeah. So that actually gives me a bit of a heads up where price might possibly reverse at ends. Yeah. So we have the divergence already playing out. Price is actually going back up. Yeah. Where will it go? I'm not really sure, but at 92, this seems to be a possible level. Yeah. But I'm not of the opinion that dollar will actually reverse significantly. To me, this might be just a pullback. If you look at the monthly chart of DXY, dollar has been on a long-term downtrend anyway. Yeah, from 85, 86, you can see that dollar is just going downwards and downwards. Yeah, so I'm not actually a huge. I don't buy into the idea that dollar will actually change the uptrend as of now. Yeah, until it breaks 92, then my opinion will change. Yeah, for now, I'm treating it as just a normal pullback. If you look in the past DXY, it did actually plunge lower. Yeah, so this may or may not be the end. Yeah, but as always, I do only trade technicals. Yeah, so for this upcoming week, I do think that at least from the chart, it does indicate that dollar will actually, for now, I would say is a correction. Yeah, I won't say it will change to uptrend. So we shall see how it goes now. So it will strengthen. Now, yen on Monday will be a pretty much important day to gauge where yen will actually go on a continuous uptrend or on its downtrend. Yeah. So we have a trend line over here, and then you can see that we have already third touches. So it has been holding here a fair bit. Now, why I'm paying attention to that is that this would be my short-term level over here. Yeah. So if yen does bounce off the trend line on Monday, if it's a bullish run, bullish bar, then I will still say that yen is going to strengthen. Now, the moment it actually on Monday, if it becomes a bearish bar and breaks the trend line and form a complete retest of this horizontal level, then I will say that yen will actually weaken all the way down to 95. Yeah, that's about it. So for yen, Monday will be a big day for it. British pound, very, very nice uptrend at the moment. Thinking that price will probably just dip a fair bit, not a fair bit, just a little bit, down to about 134, 135, and then continue up this uptrend momentum. Now the Canadian index are pretty much the same as the Japanese yen. Yeah, so it's sitting very nicely on this trend line. So on Monday, if it's a bearish bar and it breaks, then I'll probably change my opinion. So for CAD now, I'll just put it in the neutral zones. But on the big picture, it's definitely on the uptrend. Yeah. So I'll wait for Monday to decide to see whether the Canadian index, whether it's going to resume its uptrend or it's going to just break its momentum and go into a range or downtrend. We'll see about that. Aussie. Now, this is one of the typical pattern which I see when price is about to go on a reversal. Yeah. When I say about, that means 50-50 unsure. Uptrend, consolidations. Yeah, so the moment it goes into consolidations, and if it breaks the horizontal level, then I would say that Aussie is preparing to go into a downtrend. Yeah. So as of now, the MACD still hasn't really given me much conclusions. So I will treat it as it is still in the prevailing uptrend. It may possibly be bouncing off 76. Yeah. So we shall see about that. Now Swiss, we can looking at the charts, possibly going to weaken down all the way to 111. Yeah, you can see that this is in the past where it finds a major resistance level. Euro probably also going to weaken all the way to 120 in the past resistance level, and we shall see what will happen at 10. And Kiwi is still, at least according to the chart, is going to weaken all the way down to 70, and then from there we'll see how it decides to go. Yeah. So overall, this upcoming week, I think we might see a lot of changes. Yeah. So I think Monday and Tuesday is going to be crucial. For me personally, it will decide quite a fair bit where the currencies will go. Yeah, that's about it.
Cheers, mate. And I think there's for the first time this year, there's a bit of news coming out as well around the CAD, around the yen, as you mentioned, I think, and there's one other, can't remember what it is off the top of my head, but the Forex Factory will tell me that, and I'll have a look at that very, very shortly. Now, I'm going to give you a look at my charts, and if I can find the share button. It's disappeared on me. Oh, I hate it when that happens. There we go. All right, first one I'm going to have a look at, and I do have 4 pairs now. I said I only had 3 when I opened the show because I wanted to have a good look into the brains of our brains trust around what was likely to attract their attention, because I have my opinion on the Aussie and I just can't quite decide which one I want to trade against most of all. But I'm kind of swaying towards the dollar. We'll get there in a tick. Kiwi CAD is the first, however, that I want to have a look at. I've got the monthly chart up here. The reason I've got the monthly chart up here is because I think it gives me the clearest view of where we are in terms of what happens next. And I think we're at a pretty strong resistance area here, and we have rejected it again. You can see it's been support through here. It's been resistance through here, support through here, failed resistance there. Well, I mean, successful resistance, which was retested, sent that back, and we haven't been able to get above that line, which is around about 92, the 92 cent mark, since we're about mid 2018. And I have no reason to suspect that that should change anytime soon, given we've got, and they're both commodity currencies, let's be fair, but I think the CAD on the back of oil, and we just had some commentary on oil, that was fairly bullish. Maybe retracement before that, that's true, but I can definitely see Kiwi going south against the CAD. Of course, we just mentioned that there's CAD news, and that kicks off pretty much the interest rate season on Wednesday. I think that news is coming out. So I really like to be in this prior to that. And I'm just waiting probably to see a bit of a retracement. But let's have a look at the smaller time frames and see what we've got. A pretty clear rejection, one here, one here, one here, of this 92 cent level. As I said, I'd be looking for a pullback on that, the weekly chart. You've got the monthly pivot that's just been broken. So a retest of that would be a nice opportunity for me to go short here. It's also giving me an indication that there's a left shoulder that's formed here, a head here, and maybe we're looking for a little bit more before we come back and form a right shoulder. So it's not as clear cut as one would like it to be on the weekly chart. Maybe there is a little bit more selling coming back to retest this level before it goes long and forms that right shoulder. I'm getting way ahead of myself there on the weekly chart. So I'll look at the daily. You can see that break retest of the monthly chart that we had, which was, of course, a nice little scenario for me on Friday, but unfortunately I was up in the mountains and no reception. Not that I would have been trading generally anyway, but you can see where I'm going with that pull back down to this, well, what effectively was last month's monthly pivot. And I kind of, I'm on board with that. And then I might ease off the pedal and wait for that right shoulder to form. If it doesn't, of course, and we slip straight through here and retest it, then that becomes another trade. So early doors, but I'll be looking tomorrow to get into this short. I don't see how I can possibly do that on the 4-hour chart, which is kind of where I'll start my journey. But if I were to get price up to here, retest this breakout level, come back underneath and retest the trade line, then I might find that way into that currency pair short. Kiwi CAD, so that's definitely my bias. I'm a seller, but I've got to see a setup, of course. Pound yen is the next one, and take on board what Julian was saying about the cheap pound sterling, and I get that, totally get that. But I also get that we may have a shorter term opportunity to pick this up to the short side. Not dissimilar to what I've just spoken about. We're at a pretty strong level here from a horizontal point of view. And I'm not sure where that exact level is. It probably isn't an exact level because we've had, you know, little bits of false break here, false break here, false break here going on in the opposite direction. So that's exactly what I'll be looking for on this one, a false break to the upside. So how will that look? That's the weekly chart I'm looking at. And if I were to see price get above here and then reject that level, back underneath it, retest it, that would give me a pretty clear indication that this is on its way down. There is another chart pattern on here that I don't mind at all. I'll use my pen to show you that. I'm sure some of you can probably see it anyway. There's a pretty clear ascending triangle there. Now, everyone's a very bad thing to say. A lot of people will tell you that this will break to the high side, and I totally get why, because there is certain evidence to suggest that ascending triangles are giving us higher lows, but they're not giving us higher highs. So I'm not totally on board with that. Yes, I think it will probably go higher from here, but whether it stays there is, of course, another question entirely. And that's what I'll use, this confluence area, top of the range, basically. I call that a range. And descending or resistance, trade line or trend line. And that's the key for me. So this area is all important, and I'll judge what happens as to what I'll do next. So if we were to break here and retest that without coming back underneath it, that's a bullish signal. But if we come back underneath it, in particular, both of the confluence, if you like, top of range and triangle, and trend line, then retest that, then we're going in the opposite direction, in my humble opinion. You've got to take into consideration that we've got a massive double bottom sitting here as well. So that's bullish. So if this does break to the high side and retest, I think that's a perfectly valid trade to take. But if it fails, then we could look for yet another higher low in this vicinity. Maybe that's what the market's looking for, maybe to match that, maybe to match that. If that were the case, then I would continue with that bullish scenario. But at the moment, I can totally see this going either way. So I'll wait and see what happens at that trend line and at that confluence area. But I'm willing to trade it in either direction based on what I've just said. We have got a reason to think it's going long, but we'd also have a reason to think that we haven't seen that significant higher low yet. So a little bit each way on that until we get a clear picture, or a clearer picture, hopefully starting tomorrow. All right, let me clean that up and go to the next one, which is dollar CAD. Now, dollar CAD is interesting for a few reasons. Reason number one, we've spoken about oil today, and that may be in a bullish scenario, certainly in a bullish seasonal pattern coming up towards the end of the month. We've got a potentially stronger US dollar coming up, and that gives us a little bit of a dilemma. So what do we do in that case? Well, we go to the technical chart, and the technical chart's kind of screaming at me at the moment that this is going south, not north. And the trick here, of course, is timing. How do we get into this? You can see that massive double top sitting there. And that, to me, is the influencer. I'll call it the influencer of what's to come next. And we have had that first phase, if you like. Maybe we've had two phases of that. I'd be expecting a retracement. And that retracement, for me, is probably back to that level there. You can see it's been support here, resistance here, support here, and now that support is broken again. So I'd like to see that retested. That's around about the 129.70 mark. Let's call it 120. Let's call it 130 even, if you like. It's a bit of a cloud of a price. So I'll be looking for this to retrace, and then I'm a seller. So that kind of goes along with a short-term dollar bull run. And we've already had a look at the dollar index chart, and I get that. So I'll be looking to pick this up after that. And we have already seen the dollar come off the bottom, maybe. At this point, it's certainly come off support. And you would expect that to be the case. A lot will hinge, I think, on what happens in the capital this week. With 20 odd thousand troops there, you wouldn't expect there'd be too much going on. But, you know, Americans do funny things at weird times. I'm expecting this to retrace, as I said, and then I'll be looking to pick that up short. And I think this can go a mighty distance. I'm looking at back to here, back to these levels, you know, in the least, and maybe even back to retest these lows. If that's the case, maybe I should just find a way in anyway. If I really think that, even, you know, a 400 pip risk to pick up 2,000, maybe even 3,000 pips may be worth doing. But you've got to have a belief that there is it is the right time, and I'm just not there yet. I've got to see that retracement, and as soon as I do, then I'm a massive seller of dollar CAD. The final one, as I said, I was looking for the Aussie to retrace, and I've chosen the dollar because I think that rally is on, and the market will look at that as momentum. And we've also found a pretty strong resistance level here in the Aussie dollar. You can see the resistance we've had through here, the support we've had through here and here. And of course, we went into a big consolidation there. Then we found resistance. It broke, came back, retested it, and here we are again. So it's this level around about the 77 mark, between 77, 77.50, that kind of area, that I think we will find the Aussie will fail at again. Where it goes, look, I'm a bull. I'm a longer-term bull, the Aussie. And again, I'm going back to exactly the same theme. We're going to have a stronger US dollar in the near term, but I don't see that being sustainable. So I think, you know, a nice retracement here is completely on the cards. Pick a level, let's say back to the 74 mark. So I see about a 300 pip fall here, and I'm looking for that set up earlier in the week. That's the monthly chart I'm looking at. Daily is telling me that that is potentially underway. Not there yet, of course. That bar there, extremely interesting to me on a daily chart. Wish I was trading on Friday. I probably would have picked that up. I've got to see now, I guess, another reason to trade this. There'll be a trade line coming through here. I'll probably look to pick that up as a false break early in the week. Well, that'll be Wednesday before it sets up. I may even look at it on the 4-hour chart. I'll certainly be doing this in the show tomorrow. And I'll be looking for one of two things. I'll be looking for a lower high in this vicinity, maybe even off the weekly pivot would do. But there's a nice little trade line coming through here as well. So even a break and retest of that area. But I think I'd like it to take out this area because it's a little bit too strong, because we have had resistance here and support. That's why we bounced here from a technical perspective. I'd much rather trade from a resistance area. So if we can find a little trade line coming down here and I'd look for a false break, then I'd be happy to trade that. It's almost a setup now, but I don't like trading into this area or this area. So I'll be waiting for this to retrace. If it doesn't, I'll have to pick it up after the break and retest, if that is going to happen. So guys, that's where I'm at. I have a few that I'm really keen on, and we'll look to trade and pick those up throughout the week in the new show for Ash and I, which of course is the UK Open. We're back to UK Open time. That happens at 7:55 GMT, which of course is 3:55 Singapore, and in my part of the world, that's around about 6:55 PM. I hope you can join us then. To all, I don't know, Paul, if you're still in the room, if you want to add anything before we sign off.
Mate, firstly, thanks to you for jumping in and running the show for me today. I'm at my desk listening to it, but I've got the camera on with my kids' room on. A bit of sound comes through. I'm trying to keep it away from the YouTube too much, really. Thank you guys very much. A few questions about the US show. Ash and Geoff do the UK show. A lot more information about shows in the first week of February. We've got the trading retreat the week after next. We're not doing evening shows. So we'll be back in February with new agendas and new itineraries for all that stuff for the team. Thanks for coming in and sharing your knowledge. For those that have joined us, thank you for joining us. Hope we'll see you back next week at the same time. We will be next week at this point without myself. I'm doing an event live in Singapore at the time of this next week. So I'll be looking for you to run it again if you can, Geoff. Thank you for doing that, mate. And thanks to everybody who came in and contributed. Look, still great analysis. And I do hope you guys who are listening from it. And this is the theme of the week. How do you take this analysis and make some money? That's the question. And that's the question I'd like you guys to consider for the next 10 or 15 minutes before you get ready for your trading week starting tomorrow. Thanks, everybody. Good to see you all. Take care. Hopefully I'll see a few of you in Singapore next week. Have a good week, guys. Trade carefully, make good decisions, and just be careful. I think it's unlikely Biden's going to get shot or anything like that, but it's still a big day and it's still a weird day. And just be a little bit careful in the middle of the week. Cheers, guys. See ya.
Bye, everyone. Have a good one.
See you. Thanks, mate.
Cheers, mate.